Hello there, welcome to our channel. Now we want to look at a question from the past exam paper, that is June 2022. June 2022. So we've got a question on statement of financial position and balance sheets and notes. Right. So what is important as we are writing our exams, let's take note of the time that is required to complete the question. For example, here we've got 35 minutes. Let's be careful about this. Let's not overspend time on one question. So just try to balance. And the question is 45 marks. So it is a powerful marks. So let's go to our question. Question 1.1 is saying complete each of the following statements by choosing a word from the list below. Next sentence, write only the words next to the question numbers 1.1.1 to 1.1.3 in the answer book. So we've got those words that we are given, and then we've got those sentences that we are given that we need to fill in. So 1.1.1 is saying the dash are employed by the company to set up and monitor control processes. We know that we have got two types of auditors, the internal auditors and the external auditors. And then the internal auditors works full time in the organization to try to make sure that internal controls are being abided by. So the most appropriate there is internal auditors. So 1.1.1 is internal auditors. So the 1.1.1, that's the answer for internal auditors. Then we go to the next one, 1.1.2. Days are appointed to give an unbiased opinion on the financial statements. You know that at the end of each financial year, the company, according to the company's company law, is to appoint an external auditor to give an unbiased opinion on the financial statements, to safeguard the interest of the shareholders and the other stakeholders that are also interested in the company. So the most appropriate there is external auditors. So 1.1.2 applies here on external auditors. Then we go to the last one. They are appointed by the owners of the company to perform key management functions. So these are the workers of the company. If you look at the answers that we are having there, we see that we are only left with directors and shareholders. And we know that shareholders are the owners of the company. So it means it doesn't apply there. So we are left with directors. Directors is most appropriate there. These are employed by the company to perform key management functions. So 1.1.3 will apply here. Right, enough on 1.1. Then we go to the next question. The next question is 1.2, where we have the name of the company, Prudence Limited, and the question below is the information relates to the financial year in the 28th February 2022. So before you answer this type of questions, take notes of the financial year. We know that the financial year is ending on 20th February 2022. So what does it mean? It means it's starting the previous year. So from 20th February, it means the previous year, it started on 1 March. 1 March 2021. That's when it's this company started in terms of its financial year, and then it stretches to the end of the financial year being 28th February. So this is very important for you to take note of these guys, because you are going to see that in the calculations that we are going to make, they are going to relate to this financial period. We are going to see as we go. Right, let's go down with the question. The first one is saying complete following notes to financial statements. Let's see which notes are there. We have the ordinary share capital note as the first one. Ordinary share capital note as the first one. So here is the first one. It has 7 marks. Ordinary share capital note is 7 marks there. So what we are supposed to do, we are going to present this ordinary share capital note here. I have prepared the ordinary share capital note beside that, so that we enter what is required to be entered there. So if you look at the ordinary share capital note that I have prepared there, we have the starting on the balance on 1 March 2021. That's where the year is ending. So we are going to take note of that on the when the year is starting, and we take note of the periods when it's starting and then when it's ending. Then our year, we are seeing that our year is starting on 21, starting on 1 March 2021, ending on 22. Ending following year. Right, so we are saying we check on the balance on 1 March. That's where the year is starting. So we would like to see which balances do we have. So if you look here on the ordinary share capital note that I have prepared there, we have here, we need to know how many shares do we have. We are going to put shares this side, and then we put details in the middle, and then here we are going to put the at the end here put the value of the shares. So on 1 March, we would like to see what shares do we have there. Let's try to check on the list of balances that we are given. If you go to the question down there, you've got a list of balances there, extract from the accounting records on 28th February, 28th February. We are not told there which is it at the end or the beginning, but we are given there in terms of columns. We've got 2021 and then 2022. So it means on 2021, that's where our year is starting there. So the year, that's the beginning, and this one is the end. So the balance that we need at the beginning there is this one. It's a question mark. It means we don't have the value of the shares at the beginning of the year. So what we want to see now again is to see the number of shares that we have at the beginning of the year, since we also have a column for the number of shares. So beneath that, we are seeing that this is the end of the page. So it means we don't have anything here. Let's go to the next page and try to see number of shares that we have at the beginning of the year. So if you come here, we've got a table here that we are given that is showing us number of shares that we have at the beginning of the year. So it's stated here that 75% of authorized share capital of 1,200, of 1,200,000 of order shares were issued. So these are the shares that we have at the beginning of the year. So it means we have put 0.75, which is 75% of 1,200,000. So we want to calculate to see what value of shares we have in terms of the number. So we have put 0.775. So we are going to say 0.75, and then we multiply by 1,200,000. So if you do that, you are supposed to get 900,000. So it means we have got 900,000 shares at the beginning of the year, but the value again we don't have, because we don't know which value per share do we have, so that we multiply by this one. Because this one is not in value, this is in quantity of shares. So we need to know the value of the share per unit, so that we know the total value. So we go back there and put the number of shares that we have there at the beginning of the year. So it means here we are having 900,000. 900,000, and we know how we got this 900,000. We said 75% of 1,200,000 shares. Then the value this side we don't have the value. We are going to find it as a balancing figure. Then we go to shares repurchased. Now we are on this now. shares repurchased, and we want to see how many shares were repurchased. So we go again on the next page and try to see how many shares were repurchased. So here, that's where we have got the detail of how many shares were repurchased. We've got 80,000 shares that were repurchased. So whenever there's a repurchase, it indicates an outflow of cash. It means it's going to be a negative figure in our ordinary share capital notes. Now we need to see how many shares were repurchased. We are told that he was paid 20%, which is equivalent to 136,000 rands above the average share price, and no longer qualify for dividend. So what it means, if this is 20% over the average share price, it means average share price is average share price represents 100%. And then this one was paid 20% above. And the 20% we are given is 136. Equivalent to 136 rands. 136,000 rands. Right. So we now need to know to see what value of 100% we have there. So we are just going to use simple proportion there by saying 20 is equal to 136. What about 100? So this is simple stuff as it is. So what we have to do, just have to look at the side that we have both figures here. That's where we've got both figures. We've got 120 there. So what we want to, what we are looking for is 100%. So we want a bigger value because we are going to use proportion. So when we need a bigger value, we just put the bigger value on top, because here these are the two values that we are given. So it means here we are going to put 100 on top as the numerator, and then 20% becomes the denominator. Then we multiply by 136,000 over 1. But basically here, as straightforward as it is, if you say 20 to 100, you get 5. Then if you multiply it 5 times 136, you find now the total number of shares that were repurchased. So if you do that, you are supposed to get 80,000. You are supposed to get 680,000. This will be the total value of shares that were repurchased. So we are going to input 600,000 on the value column, and then on the number of shares column, we put 80,000, since we have 80,000 shares that were repurchased. But this will be indicating negative values, because whenever we repurchase, we are experiencing an outflow of cash. So this here on this side of quantity of shares, we put 80,000. These are the shares that were repurchased. Then we put them in brackets, and then we now want to see on the column of value now of the shares. We calculated it as 680. So we're just going to put 680 here. 680,000. Then we put it in brackets again to indicate that this is an outflow. Right. So whenever we repurchase at the value of the average share price. So the issue is how do we find the value of the average share price? The value of the average share price, we say total of shares before the repurchase, average share price formula is equals to total shares value before the repurchase over number of shares before the repurchase. So what it means, the average share price that is here when shares were repurchased, we got it from shares that were there before. So shares that were there before were are the shares that are having on 1 March at the beginning of the year. So the average share price of shares repurchased here also applies here. It's just the same average share price that we're going to use. So to find that average share price, we are now going to say 680,000 divided by 80. Then we get the average share price. So what we are going to do, we are just going to say 680,000. Then we divide by 80,000. So when you do that, you are supposed to get 8.5. So it means each share is with an average share price of 8.50 rand. So to get now the value of the balance of share at the beginning, we are just going to say 900,000. 900,000 times 8.5. So when you multiply these two, you are supposed to get 7,650,000. This one will show it as a positive figure. It is indicating the value of shares at the beginning and the quantity of shares at the beginning. So as simple as it is. So if we had, if shares were issued before the repurchase again, it was going to be a different scenario whereby we are just going to add the total value of the shares before the repurchase again by adding the shares, new shares issued and the shares at the beginning. Then total value, we divide it by the total again of shares, including shares that were issued plus those that we are having at the beginning of the year. So that's basically the approach that we are supposed to employ here. Then lastly, there have got shares issued on 1 December 2021. So what we'd like to see now, which shares were issued there. Let's go to the information that we have here. These shares that were issued are stated here. On 1 December 2021, in additional 100 shares were issued, but we are not told they were issued to how much. So it means the value of those shares are obviously going to get the value as a balancing figure. So we are just going to input 150,000 shares is issued, shares issued, and we know whenever we issue shares, we receive money as a company. So this is going to be there is a positive figure. So if you go there on our answer section there, we issued 150,000 shares. So we're just going to put 150,000 this side. Then the value here, we don't have the value because we don't know how much they were issued. So we are just going to get it as a balancing figure. So we now have the information on the section, all the information on the section of the quantity of shares is now there this side. So we can find the balance, the final balance. So we can just say 900,000 minus 80,000, then 850,000 shares to get the quantity of shares at the end of the year. So if you say 900 minus 80,000, here 900 minus 80 here plus 150,000, we are supposed to get 970,000 shares. So here we are going to say 970,000 shares. These are the shares that we have at the end of the year. So on the side of the value now, we are now this side. We don't have shares issued on 1 December. This is the value that we want to see at the balance figure. And then the value of the shares at the end of the year, we are given in the list of balances. Let's check there. The balance at the end of the year, it's given here. So here's the value of the shares at the end of the year on 2022. That's 7,954,000. So we are just going to input that figure there. So let's go there, back there and see. And put this as the final balance of the shares that we have at the end of the year. It's 7,954,000. So we are going to put it here. 7,954,000. So basically that is what we have there. And then we now want to find the balancing figure there. So to find this balancing figure, this one of the value of shares issued on 1 December, we can just maybe I put it in the form of a formula, because what we did here to get 7,954,000, we said 7 million 7 million was like 7,650,000 balance at the beginning. We subtracted shares repurchased, which is 680,000. 680,000, and then we added the shares that were issued, which we don't have, so you can put in an unknown figure there as X. Then we got 7,954,000. So this is the balancing figure that we want to find. So here you can just make X substitute the formula there. So you are going to be left with X is equal to 7,954,000. Then this negative 680,000, if it comes the other side, it becomes a positive figure. So we're going to say plus 680,000. Then we subtract this one is a positive 7,650,000. It's a positive. So if it goes the other side, it becomes a negative. So it becomes a negative 7,650,000. So then what you are supposed to do when you now make the calculation of 7,954,000 plus 680,000 minus 7,650,000, you are supposed to get the balance figure, which is 984,000. So this is the balance figure that we are looking for, that we are going to put here. Right. 984,000. So this is the, so it means the ordinary share capital note now is finished. Let's now go to the next one, which is the retained income note. So the retained income note also is starting on the balance at the beginning. This balance on 1 March 2021 year. This balance is the one that we are starting with. So if you go to the list of balances that you are given, let's try to see if we have it at the beginning of the year. This one, retained income is here. We have retained income here. Here. So it means at the beginning, it's on 2021, we have a question mark. It means we are also not given the balance at the beginning. So we are going to find it as a balancing figure. We're only given at the end, which is this one, 1,196,000. So we are going to leave that one at the beginning. Then we go to the next one, is net profit after tax. Net profit after tax here, the one that we want to look for next. So we go to the information that we are given and try to see net profit after tax right up. On C, that's where you've got the information of net profit after tax. They're saying income tax for the year after taking into account all adjustments amounted to 438,000. This is 30% of the net profit. So here again, we are just going to apply the concept of a proportion, as simple as it is. So what we are going to do, we are going to just say 30%. We are going to say 30% here. 30 is equal to 438, as we are given there. They're saying our tax is 30% of net profit, while the amount of the tax is 438,000. So the one that we are looking for is net profit after tax. So net profit after tax, we know that net profit before tax is 100%. Net profit before tax represents 100%. And then the tax amount, it depends on the question. In this question, it's 30%. And then the net profit after tax now. Net profit after tax, we say 100 minus 30 to get 70%. So it means here the figure that we want is 70%. So that's the figure that we want. So we just make a proportion there, and then we do the same thing that we did earlier. That is, we are given this site figure, all the figures we are given. So we want 70, which is a bigger site, a bigger figure. So it becomes our numerator. We now say 70 over 30. Then we are multiplied by the figure that we are given is 438. 438,000 over 1. So we do that. If you calculate it as it is, you are going to get 1,022,000. So you can just go and summarize it there in the change income note to just show the marker that how did you get it, what's the marks that you are given for that. So we are just going to say 30 over 70 times 138 there, and then we put our answer there, which is 1 million. Let's try to go back there. Let's see. Yeah. So for our net profits after tax there, we are going to say 7, just summarize it here as 70 over 30 times 438,000 over 1. 438,000 over 1. So this is how we got our net profit after tax. And then the answer that we are supposed to get here is 1,022,000. So net profit, we are going to add it to balance at the beginning. So we put it as a positive. Then shares repurchased, we are only concerned about the value above the share price at which the shares were repurchased. So if you go back there to the information that is explaining about shares repurchased, you will see that they were repurchased at 1.6, sorry, at 136,000 rands above average share price. So this is the figure that we are only concerned with in the change income note. So we go back and we put that figure 136,000. Let's try to see. So here we have put 136,000, and we have been always explaining that whenever we have a repurchase, it's an outflow, so it's indicated as a negative. So we are subtracting 136,000 there. Then we now have ordinary share dividends. We know that total ordinary share dividends, we say interim dividends plus final dividends. So we go back again in the question and try to find what they are saying about interim dividend first. So if we come here in the table that we are given there, they're saying interim dividend of 28 cents per share was paid. And these interim dividends were paid on 31 August 2021. So we try to see that by 31 August 2021, how many shares were there in the business. But if you look according to our question, at the beginning, we had 75% of authorized share capital that we calculated and we got 900,000 here. And then on 3rd August, just before interim dividends were paid, 80,000 shares were repurchased. So it means the shares that were there just before interim dividends were paid, we had 900,000. 900,000. Then we subtract the 80 that were repurchased. We are supposed to get what? We are supposed to get 820,000 shares. So it means when interim dividends were paid with 820,000 shares, but they were paid at 28 cents, so we multiply by 0.28. So if you multiply by 0.28, we are supposed to get 229,600. That's the figure that we are going to input there. So we go back there on interim dividends and just summarize the working. That is 0.28, which is 28 cents, multiplied by 820,000. between brackets so that this is the working. And then if you multiply the two, you're supposed to get 229,600. Then we go to final dividends. Final dividends, you don't have to worry much. First of all, you have to look in your question whether you are given the figure for ordinary share dividends at the end of the year. So if you look in our question here, you look in our question here, we've got there ordinary share dividends here. Ordinary share dividends are here. They are here. And these are the ordinary share dividends at the end, 213,400. So they represent final dividend. But in the case that you are not given that figure at the end of the day, you are supposed to calculate it according to the instructions that you are given in the question. So here we're just going to take it as it is, 213,400, and input it here, 213,400. Yes, for final dividends. 218,400. So if you add the two, 229,600 plus 229,600 here plus 213,400, the total that you are supposed to get is 443. So this figure, we are also subtracting it because they are dividends that were paid. They reduce the figure for our retained income. So we subtract there. Then now we are left with the balance at the end here. We're now left with the balance at the end. That is this one. Right. The balance at the end, we look in the question there. We are given that balance in the question. So we go back to the list of balances that we are given there. List of balances is here. And then we look at retained income. Retained income, we are given the figure for retained income at the end of the year. Yes, 1 million here, 1,196,000. That's the final figure that we have. So we are going to put that figure as our balancing, as our figure for the end of the year. So it's 1 million. We have 1,196,000. 196,000. So this is the final figure that we have. So if you look in the question again, we now want to see the balancing figure now, which is the balance at the beginning. At the beginning of the day, that's the figure that we are not given. So you will see that, find the balance on 1 March day at the beginning. This is the balance that we want to look at here. So we don't have that figure, but if you look the way that our chain income note is constructed, we see that we say the opening balance, which we don't have, we can just say it's X. We add net profit after tax, which is 1,022,000. Then we subtract the shares repurchased, which is 136,000. Then also subtract total dividends, which is 443,000. To get the final balance, which is 1,196,000. So for you to get X, which is the unknown there, the figure that you want to find is the balancing figure. You just make it X instead of the formula. It becomes X is equal to 1,196,000 thousand. So we now put these figures to the other side. 1,022,000. If you put it to the other side, it becomes negative. So it's minus 1,022,000. And then negative 443,000. If you put it to the other side, it becomes positive. So plus 443,000. And also add negative 136. So now it's now positive. It's now plus 136,000. So if you do the calculation, you are supposed to get now the balancing figure, which is 753,000. So when you get this figure, this is the figure that you're going to input here as our opening balance, 753,000. So that's enough on our uh, notes. That is the ordinary share capital note and the retained income note. Now we want to go to look at the statement of financial position, which is the next part. Right now we want to look at the statement of financial position. But in our statement of financial position, in our answer sheet, we have got an indication that we have got under, we are going to start on assets. So we have got non-current assets. For non-current assets, there's an indication that we have got fixed assets. But if you look at the list of balances, we have got no fixed assets that are there. So it means we are going to find that figure as a balanced figure. But as non-current assets, we also have fixed deposits. We have a figure for fixed deposits there. This one, this figure for fixed deposit that is here, is the figure that we have, 489,000. So we are going to put that figure. But if you look at the additional information that we are given, there is an adjustment that we have to make on the fixed deposits. So if you come here, let's try to see where we have that adjustment. Yeah, fixed deposit. Right. If you come on E, here, on E, you come on E here, we put an adjustment of 240,000. The fixed deposit will mature on April 2022. So it means this 240,000 it's going to be a current asset. So we are going to subtract this 240,000 from the total of fixed deposits, which is 489,000. So if you go to our answer sheet here, so the figure that we were explaining was fixed assets there, which we are going to find as a balance figure. But we also have fixed deposits that we are going to enter here. Fixed deposits. Also have fixed deposit that we need to enter. Deposits. We are saying this fixed deposit, we are going to subtract the part which is the current asset, which is 240,000. So we say 489,000 minus 240,000. So if we do that, you're going to get 249,000. So 249,000 is the figure that we are supposed to put there. Then we leave it as it is. We are going to come back to find a figure of fixed asset as a balanced figure. Then we go to current assets. On current assets, we have got inventory as the first figure that we are supposed to input there. Let's look on the list of balances. But if you go to the list of balances, inventory is We find it here. Trading stock is inventory here, and it's given as a question mark in 2022. So it means we are also going to find that one is a balanced figure. We can leave it and go to the next one. The next one that you are given there is trade and other receivables. And on trade and other receivables, uh, so the formula for finding trades and other receivables is that you have to start with the figure for debtors control, which is this one, 875,000, and subtract provision for that debt, the level of provision for that debt for that year, and then we add other receivables that might be in the question. So we have 875,000 that we are going to start with, and let's try to see the provision for doubtful debts. We are given the provision for doubtful debts, provision for bad debts here, but we don't have the provision. We don't have the provision for this year. It's given as a question mark. And as a question mark there. So it means our provision, we need to find it again. Here's the provision for the output dates. So if we spend 3,640, let's look at additional information and try to see what they are saying about provision for the output dates. So if you go on part D, here, this 2,610 is explaining about provision. They are saying the provision of bad debts must be increased by 2,610. So it means the total of provision for doubtful debts for this year, we are going to say this 2,610. Then we have the balance at the beginning of provision that we have here. So we are going to say 2,610 plus the figure that we have for provision there, which is 23,640. Right. So if we add the two, you're supposed to get 26,250. So that's the figure for provision for that year. So we are going to subtract this figure from debtors control. And then we try to look, so let's try to make the calculation here for trade and other receivables. So we could trade and other receivables. Trades and other receivables, we can find it as saying the total for debtors control. We are going to say, take the figure for total for debtors control, which is this one, 875. It's 875. And we subtract the provision 26,250. And then when we do that, we look for other receivables that are there in the question, and we are going to see them from the additional information that we are given. Let's look at the second point there on D. This one is saying 1/2 of audit fees were paid. The balance will be paid in March 2022. So this is an accrued expense. So we are going to include this one under current liabilities. So we don't include the other receivables. Go to the next one. A tenant occupies part of premises from May 2021. He has not paid the rent for January and February. So this is an income which is accrued. So an income which is accrued is part of our current assets under the receivables. So let's try to find out how much was accrued for this rent, so that we include it under receivables. So we are going to we are being told that the premises, they started occupying the premises from May 2021, which means they occupied from 1 May to 31 December, because January and February they didn't pay, as it is indicated here, that January and February was not paid in. So if you count the months from 1 May to 31 December, you are supposed to get 8 months. Okay. So it means the rent that you are given in the list of balance is for 8 months. So we go back to trying to see what trying to see which figure are we having in question. So it's for rent income, it's here at the bottom here. It's 102,500. So if you divide 102,500, it's 102,400, sorry, 2,400, and then you divide it by 8. Get 12,800. So it means every month rent was that amount, which is 12,800. So for 2 months that were not paid, January and February, we're going to say 12,800 multiplied by 2. Multiplied 2,800 divided by 2 times 2, then you get 5,600. So it means this one you're going to edge it. Okay, 25,600 and 25,600. And then we try to look on other adjustment that's going to affect our trade and other receivables. Let's look again on the additional information that we have. It's another right. We go to the part F. We put an adjustment that is here again on F here. They're saying a daily balance of 17,950 from debtors ledger must be transferred to creditors ledger. So what it means is this figure 17,950 was a debit in the debtors ledger, is under the debtors control, but we need to transfer it to the creditors ledger. Means by transferring it, we are crediting it in the debtors ledger. When we are crediting, we are subtracting. So you are going to subtract that figure from the balance of debtors. So we subtract again here 17,950. And then we try to see again any other receivables that we can talk about. Here we have right. Let's try to see. Right. Let's go to C. Let's go to C. C again is got an adjustment which we need to make there. C is got another adjustment. If you come at C there, here, it's talking about the tax. The tax amount that for the period was 438,000. And the tax that was paid, the provisional tax that was paid was 450. That is in the list of balances. So it means what was paid is more than what was supposed to be paid. So it's a prepayment of an expense there. So if you say 450 minus 438, you're supposed to get 12,000 here. So this 12,000 is a prepayment of an expense, and it's part of our receivables. So we are going to add it for under receivables there. So when you say minus 17,950, we also add 12,000. So this working, you are going to put it under trade and other receivables in the income statement. So because it has some marks that you need to get there. So we go to the, so if you do this, if you make the calculation of 875,000 minus 26,250 plus 25,600 minus 17,950 plus 12,000. You are supposed to get 868,000. 868,400. So this is the figure that we are going to put in the balance sheets under current assets. Right, traded other receivables. We have got the figure that is there. We put it here, which is 868,400. 868,000. Right. And then the figure for inventory, we don't have it. And then we've got the remaining part here, which is cash and cash equivalents. Cash and cash equivalents. Right. On cash and cash equivalents, we check in the list of balances. Let's check in the list of balances and try to see what's the figure for cash and cash equivalents. We are looking for the figure for bank or cash. We see that we at the end we've got an overdraft and the paid cash. So the overdraft is going to be other current liabilities. So we are going to take this paid cash of 5,000. But we also have something on additional information. The transfer that was made for 240,000. So it means this also is part of cash and cash equivalents. So we are going to add 240 plus 5. 240,000. Here we are going to say 240,000 plus 5,000. Against then if we add 2, get 245,000. Then we are seeing that the total for current assets, we are given the figure for total for current assets here. So it means we can now find the figure for trade inventory by saying 2,080,000 minus 868,400 minus 245,000. So if you do that, you get the figure for inventory, which is 966. 966,600. Right. So I think we are finished there on the part of current assets. Then the figure for total assets, we cannot find it there because we don't have the figure for total of non-current assets. So to find the figure for total assets, we are going to say the total for non-current assets to add to current assets, then we get a figure for total assets. So we're going to leave it. So we're going to come back there. We go to the what is following there. We're now going to the second part of the balance sheet, which is the equity and liability section. On the equity and liability section, we are given the figures for order share capital. They are pre-entered, they are there. So the total figure of shares is there. Then we've got non-current liabilities, which is our loan. This is the one that is not there. We've got a loan. Let's try to see there. We've got loan. And this loan is from XY Bank. But we don't have the figure. So from information, if you are looking and you are seeing that you cannot find the figure anywhere, you have to go to the additional information that you are given. There should be a clue of how to get it. So if you look in our additional information there, we have got part G. We've got part G here. Part G. Part G is saying the following financial indicators were calculated on 20th February 2022 after all adjustments were processed. We were given the current ratio and also the debt to equity ratio. So the debt to equity ratio is the one that we are supposed to use there to get figure for loan. 0.4:1. So we go back there and try to use that debt to equity ratio, which is 0.4 is to 1. So 0.4 is to 1 is the debt to equity ratio, so it's debt equity. So it means to get 0.4, we say debt over equity equal to 0.4. And then our debt is the one figure that we want. Our equity, we have the figure that is here. This is the figure for equity, which is 9,150,000. So it's our denominator here, 9,150,000. If you do that, you get 0.4. So to get our D, we are now saying 0.4 times 9,150,000. So if you do that, you multiply as it is, you are supposed to get 3,660,000. 3,660,000. 3,660,000. And this is the figure that, again, that just don't come here. It's total for non-current liabilities. Right. So no other adjustments is going to you are supposed to be made there. If you come here on the additional information, there's another explanation that is there. I think let's try to look for that one. H. Let's go to H here. H is saying the loan from XY loans will be reduced by a capital portion of 220,000 in the 2023 financial year. You see this explanation. Is the current portion of loan, this one that we are supposed to, that was subtracted from figure for loan, and it's going to be under current liabilities. But in this sense, we don't subtract it because we have used the ratio. The figure that we got there after using the ratios that we are given will be a figure after the adjustment of that current portion of loan. So we don't adjust it. But in the event that we are not finding the figure for loan by using the ratio, maybe it's a figure that is given in the list of balances, that's when you subtract it. So you have to take note of that. So we are from there, we are finished. Let's try to look at the next step there. Now we go to the current liabilities. For current liabilities, we can find the total because we are given the ratio of current assets as to current liabilities. If you come here, let's see here. Right. You come here, you figure this ratio, current ratio is current assets to current liabilities. Current assets is to current liabilities. So it's 1.6 is to 1. So 1.6 is to 1. So the 1.6 you got it by saying current assets, which you are given the figure is 2,080,000. That is 2,080,000. And we divided it by current liabilities, the figure that we want. We don't have it, but if you do that, that's how we got 1.6. So to find current liabilities, we are just going to say 2,080,000 divided by 1.6. And if you make current liabilities out of the formula there, then if you do that, you get the total figure for current liabilities, which is 1,300,000. So we can just go and summarize there the working of finding current liabilities. We are now saying the formula for finding current liabilities, we are saying 2,080,000 if you divide it by 1.6. We divide it by 1.6. Sorry, this is the wrong. We're putting it the wrong. Right. We are supposed to tender it under current liabilities, which is here. We are saying 1 million, 2 million, sorry, 2,080,000. Then we divide it by 1.6. Then we get the total figure for current liabilities, which is 1,300,000. Then we say 1,300,000. So we just made current liabilities subgroup formula from that formula. And then this one, so we now have the figure for current liabilities. So remember, bank overdraft, you are going to find it as a balancing figure there. This bank overdraft, you find it as a balance figure. Then for trade and other payables, the formula for trade and other payables, we are going to start with the figure for creditors control. Then we add other payables that are there in the question. So if we figure for I think we can start with the figure for creditors control, which is 617,400. We're going to see it 617,450. Then we look for other payables now in the question. I think we have got 1 or 2. If you go there for audit fees here, they are saying the half of audit fees were paid. So it means the figure that we are given for audit fees is the half that we are paid. So the other half is not yet paid, which is an accrual. So let's go back and try to find out what is that figure. We have 48,000 here. So this 48,000 represents a half. So it means the other half is also 48,000. That is not yet paid. So we are going to add 48,000. 48,000 for the figure for creditors control. And remember, we also have the figure that we transferred from debtors ledger, this one. That's going to creditors ledger. So it's going to subtract again figure for creditors, like what we did with debtors. So we are going to subtract 17,950. So let's just go and summarize the working there and find out what's the figure for trade and other payables. So we are now here. We are adding 48,000, that 48,000 for audit fees. Then we are subtracting the 17,000 that was transferred, 17,950. So if you do that, you're supposed to get 647,500. Right. We also have the figure for shareholders for dividends. Remember, the shareholders for dividends and the final dividends will always be carried to the next period as a current liability, because they are obviously not going to be paid because they are declared at the end of the year. So there's no way that those dividends can be paid. So they'll be carried for the next year as a current liability. So we obviously put those final dividends as the final figure for shareholders for dividends under current liabilities. So that figure, it was 213,400. It's there on the list of balances. 213,400. Right. Having done this, we also have a figure for current portion of loan. Remember that figure for current portion of loan. It's given in the list of balances. We are going to go back and find out current portion of loan. That figure is given. The current portion of loan here on H, the loan from XY loan to be reduced by a capital portion of 220,000. So that's the figure that we are going to put there. It's 228. Right. Then you are now left with bank overdraft. That's the figure that we want to find as a bank overdraft is there. Right. Bank overdraft is there. Here it was supposed to be current portion. Current portion of loan. So bank overdraft is balance figure that we are supposed to find. So to get bank overdraft figure, we are just going to say this 1.3, 1,300, 1,300,000. We subtract this figure 647,500. We subtract also this figure 230,400. We subtract also this figure 228,000. And when we do that, we get the figure for bank overdraft, which is 211,100. Right. So to now find the figure for total equity and liabilities, let's see. Find the figure for total equity and liabilities. We are going to say total equity, total shareholders' equity here. Total shareholders' equity, this figure. We add the figure for current liabilities, and we also add the figure for current liabilities. So when we do that, we say 9,150,000, we add 3,660,000, we add we add 1,300,000. We get now the total for total equity and liabilities, which is 14,110,000. Right. Having done this, it means this balancing figure is also the same with the balancing figure that we are going to put for total assets. So we are going to straight away put that figure here. It's 14,110,000. So with that now, we can now find now the figure for total non-current assets. So to find the figure for total for non-current assets, we are going to say this figure, this total figure for assets minus the figure for current assets, which is 2,080,000. So if you do that, we say 14,110,000 minus 2,080,000, we are supposed to get 12,030,000. And then we can now find the figure for fixed assets also by saying 12,030,000 minus 249,000. When we do that, we are supposed to get 11,781,000. Right. So this is what we have, ladies and gentlemen. That's how we complete this this statement of financial position or the balance sheet. Let's stay tuned for more videos so that we prepare for our final exams. Stay tuned for more videos. Please subscribe so that we keep in touch, so that we prepare well for our final exams. Thank you.